Welcome to Trader TV. I'm Dan Barnes. Joining me today is Mikael Björkman, Head of Execution for Fixed Income at Credit Suisse AG. Michael's an expert in the field of electronic trading and automation for buy-side trading desks. We're going to be discussing how electronic trading has fared in the very volatile markets of 2020. Michael, welcome to Trader TV.
Hey, thanks for having me.
So this year's markets have really tested price formation and liquidity in the fixed income space. Do you think that electronic trading has held up under the pressure?
Yeah, like I say, it was very challenging. We had to roll up our sleeves and call in the reserves to get the job done. Looking back, I think electronic trading held up pretty well still. It could still provide value in these times, but definitely not the prime habitat for the automation in these markets.
And do you think that it's becoming more viable in choppy markets than it used to be when people just picked up phones?
I think so. With the support of data and liquidity provision by technically advanced counterparties, I also see future generations of automated trading being able to handle this better and better as you add intelligence to those systems.
Could you describe how you apply automation and electronification on your trading desks? Because clearly there is fully automated trading, but then there's also automation of parts of the trading workflow.
Basically, it's about aggregating liquidity from relevant liquidity providers across multiple venues.
Yeah.
Then you create an aggregated view of those data sets. And on that data, you basically take the decision what to do with every trade. It's also about making the automation fit well with high-touch trading. How can they complement each other? Because they both have their own strengths, right?
Absolutely. So that's how automation and electronification work on the trading desk. What advantages do they confer, particularly in fast markets?
Fast markets are a challenging environment to begin with for automated trading.
Yeah.
Nevertheless, you can still use the automation to collect a lot of insight about the market. And that is the main thing, except for obviously relieving the trading desk so they can focus on the trickier orders. But the high-touch trader and the intelligence, so to speak, created by the automation, that makes a very strong combination.
Well, that's interesting because people often think about automation of the processes that the trader would be doing in terms of going out to the market. But of course, there's all that information that's being fed back to the trader that they have to process. And doing that manually is very time consuming and slow.
And more or less impossible, right, to grasp everything. This is why you work on an aggregated view, which you constantly enrich with new data sources and new analytics, etc., right? To provide automation with the means to decide where to go, as well as the human trader.
Are there any particular trading protocols which you see maturing this year?
The ones creating most buzz are all-to-all based protocols, but also direct connectivity. It's basically about being able to interact and reach liquidity wherever it is. But at the same time, you also want to strengthen relationships with the key liquidity providers.
What do you think are the top lessons that we've learned about e-trading this year?
Definitely the relevance of market data. We could not trust a lot of the data products that we normally would rely on. But we would have to basically create our own image by going out in the market.
Yeah.
I think that's also a lot of lessons coming from those data providers, meaning that they will need to tie those data products into the actual trading activity, so to speak, to reflect the market levels. One of the things we touched on briefly before is the correlation between technically advanced counterparties and their ability to provide liquidity. And not just looking at technical things. The lesson learned is also about having an experienced trading desk, which is able to cope with all these challenges, using their experience, using their networks and relationships, etc. Right? I would say that is the main thing, that we realize that fixed income is still a relationship-based business. Yeah.
And do you see any quantifiable performance improvements that actually support end investors ultimately? Are they benefiting from the advanced approach that your team takes?
Definitely. We measure this continuously, and we see that our automated trading is performing very well in this regard. It's generating a lot of alpha. It is also generating alpha indirectly by relieving the high-touch traders from those easy tickets so they can focus on those trickier tickets.
Do you separate high-touch traders and low-touch traders, or do traders have access to both types of protocols?
We strive to integrate the both.
Yeah.
I don't see the automation as a separate thing. I see it as more or less as a trader on my desk. And I want the automation to support our traders, manual trading, as well as I want that experience and intuition and observations from my traders to be factored into the automation.
We've seen the level of electronic trading increase according to various research analysts such as Greenwich Associates. Do you think that the pace of change has potentially increased?
Yeah, so it has accelerated over the last few years, definitely. With, first of all, the availability of data. There's the supply of various tool sets and technologies from vendors and platforms. There's the awareness that this can bring a lot of value to the clients in the end to invest in technology. So yes, definitely, the race is on in this sense.
That's been great. Michael, thank you.
Thanks for having me. It was a pleasure.
I'd like to thank Michael for his insights and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradietv.net and etftv.net.